Hello guys, Christian here from Sanktuary and welcome again to another episode of our Daily Dose. Today is the 28th of September 2016 and quite frequently lately you probably guys have noticed that I have been looking at the DAX, the German 30, quite a bit. The reason why is basically due to the developments that we've seen based on when we first started doing these videos, this double top formation, and kind of by day on day talking about this actual instrument, we're building up a picture of what's actually happening in terms of what we're looking at, how we are reacting there in terms of market development. So it's not just that we only trade one thing. It's one of those situations where we don't want to just talk about one day where we got to trade right. We want to give kind of a holistic approach to how we're approaching the trading the market here. So we can kind of see a first analysis on this double top that I previously posted on TradingView. Please check us out at Sanctuary Mam on there. I know a couple of you are already following us on there. And we did have a little bit of a breakdown here, kind of a bit of a choppiness, and the market's pulled back quite aggressively, come back to this level of support around the 10 to 90, 10, 300 region, and is pushing higher. Now, the three main important aspects that we're looking at are these lines here. So we can draw a horizontal ray. Always remember, as we've always stipulated, that support and resistance are regions. They're not individual prices. So you can see by this line here, it's touching this peak and it's touching the body of this, but it's not impacting on it's not kind of liaising with the highs of the wicks here. So obviously just with the number of lines we'd be drawing covering most of the charts. We're just trying to get a brief idea of what we're looking at and kind of look at this spike here back in August. We can kind of use that spike there as a basis to look right and see where the bounces are. You can see there's a couple of resistance turn support, turn resistance, turn slight support, etc. So we can kind of see this kind of framework of what we're looking at here. So we can kind of stretch across there. That's approximate there based on these two reaction lows here. So the important thing to note based on today, I'm going to talk about what happened today, is that we've had this quite aggressive move up to the upside again. The market, upon the open, it did sell off a little bit, as you can see here. It rose initially in the first hour and then began to sell off, come back. It's bubbling around this resistance region here. And important thing to note is that when you're trying to trade these higher time frames, if you're looking at these, the I don't want 3 hours, pointless. The 4-hour chart on the daily, you can kind of see, as we've already just stated, that you got support and resistance regions, and especially if we're trading around about the resistance levels we are here, we can get quite a bit of choppiness. Now here, based on this 4 hours, for those on the longer time frame, it's a much easier to kind of comprehend and make your decisions. The reason why is because you're looking at the charts like here, you can kind of see there's a bit of movement based on these 2, 3, 4 candles here around the resistance, and the market's pushed higher. It's not that kind of conflicting in terms of what's actually happening. You can see, right, it's stopped at resistance, it's tried moving lower, you've had a price rejection based on the long wicks you can see here, so the market looks like it's trying to pump higher. The wick here initially is long, as you can see, but you'd expect that based on the fact that we've already had this aggressive move to the upside. It's trying to push through this resistance level. First time lucky, unfortunately not, but that doesn't mean that the move to the upside is over. So if we go down now to the 1 hour chart, we can kind of see what I mean by here. Now, there's 2 candles here, but then we've got about 8 or 9, 10 candles here that are all bouncing around this resistance level. Now, the inexperienced day traders are going to get chopped about quite heavily on this sort of price movement, this price action around this level. The reason why they're focusing on the individual price, not the region, they're anticipating breakouts too early on, rather than just paying attention to what people are doing, lying in wait, letting the market come to you, which is an important trait. And that's something I've learned myself. I mean, the whole point of these lessons is not to just make up, just read a blog about what the common mistakes are about traders and just relay them off. These are things that I have actually learned from my own professional career in trading, and by overcoming now, we're in a position where we can manage client funds effectively. So you can kind of see here that this sort of price action here is very, very choppy. So it is important to look at the higher time frames. You've got 10, 5, 6, 7, 8, 9, odd hours here. So the full trading day where the market is trying to push higher. As you can see here, you're not so much getting higher highs, higher lows, so to speak, kind of trading sideways. But you can see all of these little opportunities where the market's trying to push higher is a chance for a day trader to be looking to get in on an early breakout and try and get a home run. Alternatively, it's the exact same then for those people who are trying to short a market, which even though we've had this bearish move, this kind of collapse since the mid last week, they think you might be thinking, oh, okay, now we've got a bit of a retracement to this resistance. I'm going to sell into that, looking to target these previous lows of yesterday, the 27th there. But it is important to note that this sort of price action, do not go in over your head. Wait for the market to come to you. I've done it so many times in my career whereby you end up getting in, out, chopped about, or, taking profits early, getting out, loss, getting in again, getting out. And you can kind of really do a bit of damage on your accounts there, so to speak. Now, if you're doing little trades, the damage obviously isn't that as great as you might expect, as these moves, they're still, these moves here still, range about 60, 70 pips from top to bottom there. So you can kind of see that, some damage, considerable damage can be done if you're kind of buying in this region around the high 480s, 490s, 500 region, and, you kind of stop is placed around the 420 region, so to speak. You get kind of a worst case scenario that could be quite destructive if you're trading a high leveraged account with a small amount in it. But the important thing to note is kind of, if it's ebbing and flow, it's not really doing a much, take that on board and kind of just, so when we were looking at this morning, we got in a couple of trades and we didn't get a perfect either, in the sense that we were kind of, running low on the battery there. But you can kind of see that we were trying to get in and out as well. We weren't anticipating the breakout, so to speak, but we were initiating moves which looked more probable in terms of you might have had a little bit of a move towards the towards an upward slope and trend line that we've got. And there were some times where we would get in thinking, okay, this level looks like we're going to break, and as you can see, you've got some periods here where the market has pushed quite higher. Fortunately, when we saw the market wasn't really going up as aggressively, we thought we'd just cut that position. We make a couple of small profits, but nothing really to scream from the rooftops about there. So it's one of those where, we did make money today, but it could have gone the other way. But because we have quite tight risk management anyway, it wouldn't have been a drastic kind of day had the market not, kind of moved as it did, so to speak. So the people who are buying and holding, so to speak, they wouldn't have been in too much problems, so to speak. And we can kind of see here that we can draw a little trend line here. Now, trend lines are great things. They're fantastic for measuring market movements, but it is important to note that it's all about how you draw them. So I always draw from the wicks, and we can kind of like that, so to speak. So as you can see, this is around the midday where the US traders starting to come into the market. So you've got a bit more volume in the market there. So it's right, okay, if we think we're going to have a breakout now, we think it's likely to be around about the time that the US Open is, with the higher volumes needed to make that breakout happen. But it didn't really happen. The market, I was in a couple of trades around the 484 region. And as you can see here, that's quite towards the high of the day, so to speak. But as you can see, the market did actually push up above into the high 490s there. 495, I believe, was the. Let's have a look here. 494. Okay, 494 there. I did actually think at this stage, around about the midday, 1 o'clock, that we would actually start to see the market push above the 500, looking to target these previous highs of 517. Fortunately, that didn't happen. As you said, we kind of had a couple of little trades. You can see this on an hour chart. This market hasn't moved that much tremendous. It's moved 30 pips, which is, you can make money off 30 pip moves, but there's nothing fantastic about it, so to speak. So you kind of notice I like to, when I'm in particular trades that are quite highly traded instruments, whereby the market's really jumpy between prices, so it's kind of fluctuating between three prices at any given time. Not those that kind of, they tick once, they tick up, they tick one down, they tick one of those which are kind of moving threes, so to speak. So it's kind of like a wave. I do like to, especially if other positions are okay, I do like to watch the quotes. Without level 2 data, it is difficult to actually be able to understand where the bids and offers are. You haven't got that information. But what you can do is, if you do watch the quotes and you watch them, now, it's not about watching them obsessively and literally just standing there for 4 hours staring at what people are doing, but it's all about watching what are the quotes, where the prices, where the market's sticking, even though that the market's moving. So if you've got it floating between, say, this 489, and then it's all the way going up to 494, you probably would have seen 493.7, 493.9, and then jumping back down to 492, and then trying again, and you can kind of see where the resistance is in terms of where the market's playing at. So that way, then, that's what I mean by, if we have a short-term opportunity where we're looking to go long, and we're in a small trade, and we kind of course, the market can then really push past and go. But if you see it for a few minutes where the market is struggling to get up to surpass those levels, and then it's kind of, instead of jumping to 494, it's then coming down to 480, and it's showing there that it's trying to go higher, but it doesn't necessarily have the momentum. Then of course you'd look then to kind of exit the trade. Of course, there are times when you're wrong with this, and you kind of think, right, okay, it looks like there's some resistance here or support, and the market's trying to hammer it. It looks like it's pulling off, but of course, whenever you're targeting you're faced with a breakout or potential new high or anything like that, the market's going to take more time in due course to try and kind of get there. But kind of, I would say, by here, it's kind of trying its hardest to get to 10,500. It's had a number of different attempts where it hasn't really been able to do it, so it's kind of given me a bit of an inkling to get out there, and I think we got out to around the 490-ish region. And as you can see here, then, after the open, etc., the market just kind of tanked. The first, up until about quarter to 3, the first quarter now, it was actually at the highs of this candle, so towards the highs, so this 490, and then the market did just come off heavily, and then 3 o'clock you had the Fed comments there from Janet Yellen, pushing all the way down here. Now, of course, you've got to have a tolerance with your your support and resistance region. So I like to draw a parallel line here, which kind of shows a bit of a tolerance. Even then, this here did actually link up with a Fibonacci ratio, but even if you were taking a bit of a tolerance there, you were still being stopped out or hedged your position, so to speak. But that's not a massive issue. That's, you're kind of still going with this trend line, so to speak. And then the market's just since then pushed high and actually attained these highs. So it's all about a timing issue there. So if you were one of these that wanted to hold the trade all the way, 80, 90 pips, to the downside, then that's at your mercy. But it's a bit too rich, based on the fact that the opportunity was only going to be intraday anyway. So it's a bit too rich for me. If you're a trend follower, then yes, of course, you would take that sort of swing, from a swing high to swing low there. But a bit too rich for the day trading. But as you can see, the people who kind of entered on the Fibonacci there, they kind of, if we draw that Fibonacci out, got it spot on, and they would have had a very, very profitable trade. But I don't like trading. I like trading the news, but I don't like trading in terms of listening to comments which are subjective. So there will be a blog post on our website going up that will outline the reason why. That will be the focus of this week's blog post. Please do check it out at www.sanctuary.co.uk/blog. There is a link in the description below. So thank you very much, guys, and take care.